to reach new all-time highs. Real wages are increasing at a solid pace, broadly in line with gains in productivity. The ratio of job openings to unemployed workers has moved down steadily but remains just above 1, so that there are still more open positions than there are people seeking work. Prior to 2019, that was rarely the case. Still, labor markets have clearly cooled over the past year. Workers now view jobs as somewhat less available than they were in 2019. The moderation in job growth and the increase in labor supply have led the unemployment rate to increase to 4.2%, still low by historical standards. We do not believe that we need to see further cooling in labor market conditions to achieve 2% inflation. Turning then to inflation, over the most recent 12 months, headline and core inflation were 2.2% and 2.7% respectively. Disinflation has been broad-based, and recent data indicate further progress toward a sustained return to 2%. Core goods prices have fallen 0.5% over the past year, close to their pre-pandemic pace, as supply bottlenecks have eased. Outside of housing services, core services inflation is also close to its pre-pandemic pace. Housing services inflation continues to decline, but sluggishly. The growth rate in rents charged to new tenants remains low. As long as that remains the case, housing services inflation will continue to decline. Broader economic conditions also set the table for further disinflation. The labor market is now roughly in balance. Longer-run inflation expectations remain well anchored. Turning to monetary policy. Over the past year, we have continued to see solid growth and healthy gains in the labor force and in productivity. Our goal all along has been to restore price stability without the kind of painful rise in unemployment that has frequently accompanied efforts to bring down high inflation. That would be a highly desirable result for the communities, families, and businesses we serve. While that task is not complete, we have made a good deal of progress toward that outcome. For much of the past 3 years, inflation ran well above our goal, and the labor market was extremely tight. Appropriately, our focus was on bringing down inflation. By keeping monetary policy restrictive, we helped restore the balance between overall supply and demand in the economy. That patient approach has paid dividends. Inflation is now much closer to our 2% objective. Today, we see the risks to achieving our employment and inflation goals as roughly in balance. Our policy rate had been at a 2-decade high since the July 2023 meeting. At the time of that meeting, core inflation was 4.2%, well above our target, and unemployment was 3.5%, near a 50-year low. In the 14 months since the July 2023 meeting, inflation has moved down and unemployment has moved up, in both cases significantly. It was time for a recalibration of our policy stance to reflect progress toward our goals, as well as the changed balance of risks. As I mentioned, our decision to reduce our policy rate by 50 basis points reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate economic growth and inflation moving down sustainably to 2%. Looking forward, if the economy evolves broadly as expected, policy will move over time toward a more neutral stance. But we are not on any preset course. The risks are two-sided, and we will continue to make our decisions meeting by meeting. As we consider additional policy adjustments, we will carefully assess incoming data, the evolving outlook, and the balance of risks. Overall, the economy is in solid shape. We intend to use our tools to keep it there. We remain resolute in our commitment to our maximum employment and price stability mandates, and everything we do is in service to our public mission. With that, thank you very much, and I look forward to our conversation. Thank you.
All right, folks.
Thank you so
Jerome
much.
Powell is here.
Short and
speaking.
Sweet. So here we are.
It looks like Jerome is going to take some Q&A now, so I'm just getting dialed in here. Going to be joining you guys here after Jerome Powell finishes this Q&A session. I'm going to give you guys my take. We're going to go through the market, so please stay tuned. Jerome Powell, we're going to let him continue. Q&A session right now.
Everyone, we see the tragic loss of life and the terrible disruption of millions, literally millions of people, including here in Tennessee. We have a couple of things that we do in these situations. One is that we're encouraging bankers to work with their affected customers in affected areas. And the second thing is that sometimes in these situations when power is out, there's a need for cash. And so we find that as a very important thing in these disaster situations. And so we have the ability through the reserve banks to make sure that the banks have available cash so that if power is out for a significant amount of time, there's enough cash to do transactions. But, obviously we're mainly on the sidelines and sympathizing with this very difficult situation people are in.
Great. You, in your prepared remarks, you walked us through the decision to begin cutting rates. What has happened, though, since the September meeting? What's new since the September meeting?
Since the September meeting, so most of the data that we'll see before our next meeting hasn't come yet, of course, and we can talk about that. But I would say, one thing worth pointing to is the annual NIPA revisions, which I thought were quite interesting, and I'd point out a couple things. First, as this audience will know well, there are two ways of measuring output in the economy. There are many ways, but two principal ways are gross domestic income versus gross domestic product, so GDI versus GDP. There's lore and there's research that says that actually GDI, gross domestic income, gives a better real-time reading. And for the last year and a half or so, GDI has been quite low relative to GDP, raising, for those of us who forecast the economy, the risk that that GDP will turn out to have been overstated and it'll get revised down to meet GDI. So that's been a downside risk that we've been monitoring. As this audience will well know, quite the opposite happened, and there were very large, adjustments to revisions to GDI, and there's now no gap between the two. In theory, there should be no gap. It's no statistical error in measurement. So that kind of, I would say, removes a downside risk to the economy. Secondly, it has looked as though consumers were spending more than their income. We see disposable personal income now being estimated up, and so that's no longer the case. Again, removing what we've been thinking of as a possible downside risk that the level of consumer spending might be unsustainable. So we look at that, and again, it looks, these were very large, healthy upward revisions to income. And so
we had income was revised upward, spending was revised upward, but income was revised upward so much more so than spending that the savings rate came up.
That's right.
Even with greater spending.
Yeah, the savings rate too. So we think savings there are more savings on people's balance sheet, and the savings rate is higher. So that speaks of more kind of background that suggests that spending can continue at a healthy level. I'll just mention quickly two other things that I thought were interesting. One was just another modest increase in estimated productivity. We can talk more about that, but of course we're watching the situation with productivity. Productivity is very important to potential output, and the question is, are we seeing rising productivity which will be sustained over a period of time? And of course, I think it's way too early to say that. Nonetheless, you do see some increase in productivity because we've increased income, but not hours worked. The last thing, and maybe the most significant though, is there's a bit of a tension between the labor market data, which speaks of a cooling labor market, and the spending data, the GDP data, and which has been quite solid. And I would say that tension has not been resolved, unlike a couple of the others. Nonetheless, I would say though that if you take away from this, as I do, that you can be somewhat more comfortable with the spending data. That may also help with the employment data.
So if the economy, so GDI, it was pretty significant upward revisions. GDP also was revised upward somewhat. And so when there's strength in the economy like that, does that give you some sort of sense, or more of a sense of security when you're seeing a cooling labor market, that maybe the worst outcomes won't happen if GDP is still that strong?
So the answer is ultimately yes, but I would add, though, that I think there's a lot of thinking that the labor market may give a better real-time picture in some cases than does GDP data. So if you look back over prior downturns, you'll often see that they weren't well predicted by GDP data, but they were by one or more aspects of the labor market. Now, we don't see that happening. There's really nothing that I can point to in the economy that suggests that a downturn is more likely than it is at any time. So we don't see that, but I would say seeing that there's more support for thinking that the GDP readings we get are solid. I think that does happen. It helps at the margin. That's not going to stop us from looking very carefully at the labor market data, though.
Okay. So I have a few questions here on unemployment. The first is related to the summary of economic projections, and then the second is related to state versus national rates of unemployment. So in the summary of economic projections, the median participant has the unemployment rate moving from 4.2% today to 4.4% by the end of the year. So continued drift upward. And yet the median expects that the pace of rate cuts will move down as the unemployment rate continues to move up. How do you square that picture? How do you explain that?
Well, remember that the summary of economic projections is really just a tabulation of the individual 19 participants. So it doesn't come from one sort of consistent thing. But I can tell you why I think people will have written up a couple more tenths of unemployment. It would just be that, as we've seen, the level of job creation is maybe not quite at the level it needs to be to hold unemployment constant, given assumptions about supply. That would make sense to me. I think everyone at this point is looking at their forecasts and understanding that there are great uncertainty bands around it. But the SEP asks you to write down your most likely case, whether you want to or not. And so that's what it is.
So sort of a love-hate relationship with the summary of economic projections?
That's not unfair.
Not for you personally, but yeah. Is there
I would say it's sometimes people can pay too much attention to it. I will say, though, one thing is we do it, as this audience well knows, we do it once a quarter. And over the course of a full quarter, the old SEP can get pretty rusty, But for a few weeks after the meeting, after we write down the SEP, it's actually a pretty good read on what the thinking of the committee is. And one thing I will point to is that if you look at the path that people wrote down, we had 10 people at 4 cuts or more, or 2 remaining cuts. We had 19 people at 3 or more. But the sense of the committee, this is not a committee that feels like it's in a hurry to cut rates quickly. It's a committee that wants to be guided. Ultimately, we will be guided by the incoming data. And if the economy slows more than we expect, then we can cut faster. If it slows less than we expect, we can cut slower, and that's really what's going to decide it. But I think from a base case standpoint, we're looking at it as a process that will play out over some time, not something that we need to go fast on. It's more, it'll depend on the data, the speed at which we actually go.
Yeah, so before I get to that second question on the unemployment rate, I'm going to ask you a point-blank question here. How are you thinking about the November meeting?
So a couple things. One, we have 2 employment reports and an inflation report coming in. So the main thing will be to look, when we get to that meeting, at the totality of the data, and we'll be looking at the activity data, the unemployment data, and the inflation data, and asking ourselves, is our policy stance in the place where it needs to be for us to best foster achievement of our goals? And I think we'll take everything into account, and we don't have that data yet. So that's the main thing. But the other thing is just, I wanted to point out, and I kind of just did, that it's a committee that we will do what it takes in terms of the speed with which we move. But if you look at where we were 2 weeks ago, coming up on 3 weeks ago, I guess, when we wrote down our SEPs and made our decision, it was a situation where people were thinking, the bulk of the committee was at 75 or 100 basis points, and the votes were on 50, and that would mean 2 more cuts. It wouldn't mean more 50s. Now, of course, that'll depend on the data, but ultimately that's what the baseline is. If the economy performs as expected, then that would mean 2 more cuts this year, a total of 50 more.
Okay. Question from the audience now. The regional bank presidents know their districts very well, and they come into the FOMC meeting, and well, even before that, the Beige Book, right, provides that snapshot of what's going on around the country. And so we focus on the national unemployment rate, but there are state unemployment rates as well. Are there certain states that are primarily responsible for driving up the unemployment rate nationally? Is it something that's more broad-based? And how would you weigh sort of national versus state level?
I mean, at the end of the day, we're looking at the national aggregate levels, but the real value, one of the great values of the Reserve Bank system is we get, detailed reports of what's happening in the districts, which really start with the directors of the branches and the main banks who come in and talk to they talk to the staff and also to the president of the Reserve Bank. And I think the banks just do a great job of gathering data and anecdotal information too about what's going on in the district. This is enormously useful to us who are sitting in the center and don't have that range of context or so I think it's quite useful. But at the end of the day, we have to go on national data. Although, of course, there are different things. It's a big country, a big economy. There are parts of the country that are, doing better than others.
In your prepared remarks, you mentioned about job finding prospects. We have Dana Peterson here, chief economist from the Conference Board. The Conference Board had data recently showing that folks feel like it's getting harder to find a job. Does that, one, concern you, and two, how do you weigh sort of survey data versus hard data like a job openings and labor turnover survey, for instance?
We look at everything, of course, but in particular, the job finding rate has come down very significantly. And so if you're out of work now, it's going to be harder to find a job than it was 2 years ago when the labor market was extremely tight, where you would have had multiple employers waiting for you outside the building to give you offers. Now it's much more at a normal level or even perhaps a little bit soft. So the job finding rate is much lower. So by so many measures, the labor market is still solid, but it really has cooled. I mentioned vacancies relative to actual unemployed people who are looking for jobs. So they're counted as unemployed. That is right around 1.1 ratio. That was a tight labor market before the pandemic. But it's less tight now. That number was at 2.0, and it's worked its way down. Like so many measures, quits, all of those wages, they point to the same thing, which is a labor market that's still strong, where conditions have cooled considerably. And as I mentioned, we don't think that labor market conditions need to cool further from where they are. Just to take the unemployment rate, it's substantially higher. 4.2% is substantially higher than where unemployment was in 2019. And inflation was below 2% 2019. Take a broad set of conditions, look at 2019. That was not a high inflation environment. So this is not a problem with excessively tight labor markets causing inflation.
I'm so glad that someone submitted a question on housing inflation. I'm sure you're so glad as well. And so I'm going to ask it because we haven't really talked about inflation yet. You made a great point in your prepared remarks that it's running right around, 3-month annualized pace is running right around 2%. So housing inflation has been a large contributor to the overall inflation and continues to be an issue throughout the country. Eroding wage gains. And although housing costs are not a dual mandate, how is the housing market factored into decision-making by the Fed?
So, we think of core inflation as 3 buckets: goods inflation, non-housing services, which is by far the biggest bucket, and then housing services, and that's rents and also owner's equivalent rent. The first 2 have looked like they've, broadly speaking, moved back to their pre-pandemic level. Housing services inflation has not yet. And what's happened is that what should happen is when market rents drop, as leases turn over, when the increase in market rents drops to a low level, as it has, as leases turn over year upon year, you should see housing services inflation flatten out. And you are seeing that, but you're seeing it just at a sluggish pace, as sluggish as it usually. So I think I went from thinking at the beginning that this would happen fairly quickly to now thinking that that process will play out over a period of some years, 2, 3, 4 years. Nonetheless, as long as market rents, actual new leases as long as inflation in those rents, those leases, is relatively low, it's going to show up in housing services inflation as well. It's just going to take, my guess is it's just going to take longer than we've been expecting and longer than we've wanted. But I think, the direction of travel is clear as long as market rate inflation remains relatively low, which it still does.
So the goods side of that equation, goods prices are less under the control of the Fed, but we have been sort of moving back to our previous regime of deflation in goods prices. Some of that is probably sluggish growth from China, but how much do you rely on goods prices being in deflation in order to help that overall aggregate inflation? Well, so
if you go back before the pandemic, you had, as you pointed out, you had mild deflation in goods for globalization reasons and other reasons, and so if you take those three buckets I talked about together, they produced inflation between 1.7 and 2%. So we're trying to get back to a world where inflation is 2%, and the combination of those three buckets is less important than the fact that you get the aggregate back. So I just pointed out that goods inflation is kind of back to where it was, and so is non-housing services, and that's most of the inflation bucket. But the third one is not there. Any combination of those things will do, but I think it really looks like the third, over time, is going back down to where we would like it to be, which is at a level which won't be 2%. It'll be a little higher than 2%, but that will make the aggregate 2%, right in the range of 2%.
So you're going to be embarking on a review of the framework, and inflation, the behavior of inflation since the framework change in 2020, do you think that will inform, or how well will that inform the discussions when you do start the process of going through that 5-year review again?
So we're starting our second 5-year review late this year. So we haven't started yet. We're just now in the process of kind of laying out all the questions we're going to ask and assigning the memos and doing that kind of thing. We're not really ready to roll that out yet. But of course, we're going to be asking, how should we change our framework, which is embodied in the Statement on Longer Run Goals and Monetary Policy? How should we adapt that to what we now understand to be the way the economy works? What have we learned from the last 5 years? And that's what we'll be doing. So we'll be asking all of those questions and giving our answer. 5
years has flown by. I can't believe we're already up on another review of the framework.
Can't believe it.
It feels like yesterday.
I know.
So let me ask you, because you talked a few times about the data that you're going to receive before the November meeting, and one of those data points, most notable being an employment report that comes out during Blackout. Some time ago, the blackout period around Fed meetings was extended, and I can tell you that as a longtime Fed watcher, I loved it when the blackout period was extended because it was almost like a sleep while the baby sleeps, so I could relax longer leading up to the meeting, because we could all sort of take a break. And I also used to have a saying that and this was my personal saying, the Fed does not react well to late breaking news. And it was my way of saying, once you went into blackout, that was it. The data in hand determined that meeting. But it feels like more so over the last year or two, data, and maybe it's the volatility around the data is being considered during the blackout period. Maybe it always was, it just wasn't that volatile. Even policymakers have talked about, and yourself, data that was released during blackout leading up to the meeting. So what does that mean for an employment report that's released during blackout just ahead of the November meeting?
I mean, It depends on the broader situation, but if it's a really important employment report, you should assume we haven't made a decision until we see it. And we're absolutely going to take into account important data that comes in during the blackout period. It gets harder when it's like this, the morning of the second day of the meeting. It's harder to do that. Yeah. But, because, everything, it's a big machine. But if it comes out during the blackout period, you should just, going into that, you should just assume that what happens there could really matter for the decision. If that makes sense, there might be a situation where that wouldn't make sense. But I think in the world we're in right now, then, we're going to be looking carefully at the data, even though it's in blackout. Absolutely.
And if this is right, then even during the deliberations, during the FOMC meeting, policymakers do have the ability to change their thinking or their forecasts or their views during that meeting.
Yes. I mean, we do a lot of work, during blackout. We spend a lot of time. I talk to every participant on the Thursday and Friday before the meeting in detail about the economy and what they're hearing. And so there's a lot of discussion that goes on. And ideally, what we discuss in the meeting is kind of a synthesis of all of the views and information that we're all sharing with each other. So, but you should just assume, though, that decisions don't get made until the meeting. They're not going to be made. I mean, sometimes there isn't really a decision to make, right? It's pretty obvious what we're going to do. Other times, when there is a serious decision to make, you should just assume that it gets made with as much information as possible. If you make the decision before you get all the information, you're throwing away, some information there. You wouldn't do that.
Yeah. So when you began hiking the federal funds rate in 2022, the focus has been on the policy lags, sort of long and variable, but who knows how long or how variable. And so, it seemed like the lags were longer than we thought they would be on the way up. Does that mean that the lags may be longer on the way down? And how do you gauge whether those lags are changing?
This is a very hard part of it. You can't really know. Even now, we can't really know why what's happening is happening. People will be debating in 25 years whether what's happening now with the cooling labor market is due to policy lags or due to something else. So we can't know. What we can know is that what we believe is that policy works with long and variable lags, and we have to take that into account in our thinking, and we do. It's challenging. On the other hand, just take the current situation. What you see is solid growth in the economy. And what you see is a solid labor market. So in a way, the measures we're taking now are really due to the fact that our stance is due to be recalibrated, but at a time when the economy is in solid condition. That's what we're doing. We're recalibrating policy to maintain the strength in the economy, not because of weakness in the economy.
The transcripts are released every 5 years. And so I believe it's January of 2025 that we'll first get a look at the 2019 transcripts. And 5 years ago, you may recall that you were cutting rates. So give us a peek, if you will, into what the transcripts might show around the deliberations you were having at that time as to what were you seeing in the national and the international economy that would drive you to make that rate adjustment, and what did you see that made you feel like you had done enough?
It's a very different situation than the current one, I guess I'd start by saying. But so if you remember, we had raised rates very slowly, I think a total of 9 times, to maybe 2.25% and 2.5%. And what my colleagues and I were feeling in 2019 was significant global economic weakness, and also some weakness in the United States economy, and also just a lot of, this was a time of a lot of trade issues, and it was markets were really uncomfortable, and business sentiment was very concerned. So we cut 3 times, and I felt like at the end of the year, I really felt like it had worked well to settle things down. And so we were still, at 175 basis points or something like that. That was that situation. Current situation is one where we raised really quickly to the highest level in 20 years, policy being at about 5.3%, 5.25 to 5.5, to help with inflation in a world where we had the highest inflation in a long time. And then I think if you take a snapshot of our policy stance, which we put in place in July of 23, and look at, I did this in my remarks, unemployment was 3.5%, really tight, and inflation was 4.2 or 3%. So now look where we are. We're at 4.2% unemployment and 2.5%-ish in inflation. So the stance that we put in place 14 months ago is not the stance that we need now. It's time to recalibrate. And I think we held on for a long time. And I think we did the right thing. I mean, history will tell, but I think we wanted to get confident about inflation so we wouldn't be in a situation where inflation could just come right back. And so we held on long enough that I think we're more confident so this is quite a different situation than 19, but that's how I remember 19.
Do you think that the 50 basis points that you delivered in September, that cut you described as a strong start, did that cut give you more confidence in the soft landing?
I would put it this way. It's a reflection of our confidence that inflation is moving sustainably down, our growing confidence that it's moving sustainably down to 2%. As I mentioned, our design overall is to achieve disinflation down to 2% without the kind of painful increase in unemployment that has often come with disinflation processes. So that's been our goal all along. We've made progress toward it. We haven't completed that task. I think you'll see us using our tool, in a way that shows our commitment to achieving that. In terms of, I don't want to make a judgment about its likelihood. I just want you to know that we're committed to using our tools to do everything we can to achieve that outcome.
Well, economists every day were asked to put a probability on the soft landing. I try very artfully to avoid it, and I'll just put it as I have high hopes. So the unemployment rate, though, has risen. And so should folks be focused more on the delta, the change in the unemployment rate from that very low 3.4, 3.5 to now 4.2, or the fact that 4.2 is only 0.2 above where the committee believes full employment to be, if we can have any confidence of where we think full employment is? And how would parsing demand versus supply in that rise in the unemployment rate factor in?
I mean, the change that we've experienced in the unemployment rate is information, and we shouldn't reject that for what it's worth. It's information. We should know it and consider it. And is it telling us something about future movements in that direction? We can't know that, but that's the question. So, we're not going to ignore that. I think also the level of, and the reason why unemployment has moved up too is also important. But the level is still a level that is, I remember when I joined the Fed in 2012, I remember unemployment going down below 6 and then down below 5, and people were really thinking, wow, we're in the 4s. This is really low. 4.9% was considered to be perhaps below the natural rate. Now we're talking about 4.2. So I think you need to keep that in context. In terms of supply and demand, it's really down to the level of payroll job creation has come down pretty significantly from where it was earlier this year and certainly in prior years. It's 116,000 a month for the last 3 months, and that's without the QCEW adjustment, which would tend to suggest that that'll be revised down significantly in time if the QCEW adjustment is sending an accurate signal about what's happening now.
Those are the preliminary annual benchmark revisions.
Yes, through March.
Right.
That's right. So, I think you look at all of it. You've got a solid labor market, and we are recalibrating our policy stance, and we'll continue to do so going forward in order to maintain that position.
And when you talk about following the totality of the data, Obviously, in the U.S., we enjoy really a good deal amount more of government sources than I think other countries. We have a lot of private sources for data. And so this is a shameless plug for NABE, really, because I wouldn't be president without it. But Svenja Gudel, who is the chief economist of Indeed, is a member, a valuable member. And Indeed, LinkedIn, ADP, they all put great monthly reports out on the dynamics of the labor market from millions of data points, really, that they track. How do you take into account, sort of say, a JOLTS, which is an official government source for the flows in and out of the labor market, versus what some of the private sources show? How closely do your economists follow that?
Oh, really closely. Yeah. Of course, we look at JOLTS, we look at Indeed. You can pick out any of these and critique it, but I think the bigger picture is that the business of collecting data about the U.S. economy and analyzing it is really one of the great achievements of our country, frankly. We're committed to doing everything science allows us to do to understand what's going on in the economy. Understanding it perfectly is impossible, but we do everything. We do some of this at the Fed. Mostly this is not done at the Fed, but the collection of data and the information that we get are as good as it can possibly be. And basically, it's a great success story about our country and about our economy, I think, overall.
Yeah. Maybe another shameless plug is just that NABE is a very strong supporter of funding data agencies at the government level to ensure healthy, reliable, and sound data sets. Just saying. So given that you're talking to a room full of economists, I'd love to get a sense of how you all at the Fed use your economists. You have just a few at the Fed. I think 150 or so, I'm not sure, but it's a lot. And maybe, when you're in the committee meeting itself, how do you use the economists to give you updates, to give you the data that you need to help you make decisions?
We have a lot more than 150 economists.
Okay. I knew it was a big number.
It's a big number, but
are you hiring?
It's
for the NABE scholars.
We're always hiring, always. We're an interesting organization, and we have very large number of PhD economists, but we also have policy making responsibilities in monetary policy, in payments, and financial regulation, and so we're kind of on the line between academics and policy making, very important policy making. The economists that we have, I would say this about the other professionals that we have, they're incredibly important to the work that we do. The way I experience it is I meet regularly with different groups of economists, but if I have a question about something, often about the labor market or inflation or anything, I'll get an answer, but usually I get a group of people. And these will turn out to be people who have spent, 30 years or 20 years, thinking about that very question. And there might be 2 or 3 different opinions or way to approach that problem in the room. So people, they feel free to disagree with each other. And they also feel free to disagree with us, with the policymakers. And we feel free to disagree with them. I mean, it's a very healthy dynamic. But, these are, so many of these people. They're wonderful people. They're incredibly committed public servants. I'm deeply honored to get to work with these people, and I think I think the Fed is a great place to work for an economist. One of them said to me, one of the most senior ones said, if all we could do around here was just sit around and analyze and talk about the economy, we'd have the best jobs in the world. All the policy making is hard, but ultimately it's really fun and enjoyable to analyze and discuss the economy. We could all spend our whole lives doing that. But we have other responsibilities, too.
Just a few.
You can probably relate to that.
Yeah. Well, I think even you and I have had a conversation where you said, I like nerding out with the economists, and we appreciate that. Yeah. I'm glad that you do.
I speak economies.
You speak economist, yeah. It's a whole different language. So in our last minutes here, sandwiched between you and Alon Collette at the lunch table, lots of talk around, I hear guitars, I hear blues music, I hear comparing every band that's your favorite and albums, and I feel like that's been the conversation of this whole conference. As Alon said, we were at the Johnny Cash Museum last night. It's just, Nashville is just a phenomenal place. And so if you were to be able to stay over, what would you do this evening in Nashville?
I would certainly visit the Patsy Cline Museum and the Johnny Cash Museum. Big Patsy Cline fan. I like this kind of music. I like music way too much. The other thing is there's a band that it turns out Alon's going to see tonight called the Time Jumpers, and it's basically the best studio musicians in Nashville and hence in the world, really, in the kind of music they play. And they play at a place called Third and something or other. Third and Lindsley. But it's an excellent band. Vince Gill sits in as the lead singer, but he's not always there. Anyway, that's what I would do. And I've got to come back because I've been a fan of that band for 10 or 15 years, and I've never seen them live. So,
well, in about 15 minutes, it's going to be sold out. So
I've got some tickets.
Yeah. Well, yeah.
Already
is sold out. Oh, gosh. Okay. Should have known. All right. Well, next time then. And for now, thank you so much for giving us your time today, Chair Powell. We really appreciate it.
Thank you. Thanks, Ellen.
Well, there you have it, folks. We are back. Appreciate everybody for stopping by here this morning. Well, it's still in the morning time here where I'm at, 11:40 on the West Coast, 2:40 Eastern. Hope you're having a great time wherever you're at. Just making sure, mic check. We are live. We are looking good, hopefully, for you. The backlight is not green, so you know what that means. That means that we are in the red today. The market is moving back down in response to Jerome Powell's statements here this morning, talking about 2 more rate cuts for a total of another 50 basis point rate cut. So another 50 basis points over 2 cuts. So that'd be 2 more 25 basis point or quarter point rate cuts. What would that bring down the rate down to? Because they just did 50. So that's going to bring us down to what, 4 to 4 1/4? It's probably going to be that range, which they think is a more neutral rate, which it is. But the problem is we're not in a neutral time. We're not in normal times. Now, of course, as he was going through the statements there, he's acknowledging what we've been talking about. Let me just check my notes here. I got my sticky notes here. Sorry, excuse me. My apologies. Gross domestic income versus GDP. Yeah, we've been talking about this, right? A lot of focus on GDP. Looks strong, looks good, 3%. That just got confirmed for the second revision of Q2 GDP. But when we look at gross domestic income, not so strong, right? And so that's something that we've been talking about. Now, he did say that they're not in a hurry to cut rates. And I was surprised, actually, that he came out and made that statement that he's going to do 2 more rate cuts this year. 2 more rate cuts this year for a total of another 50 basis points. And so that would bring down the rates by 1% total this year over the course of 3 cuts. Now, he said that, of course, his favorite statement, the totality of the data. That's one of his favorite statements. You know, no matter whether we're talking about unemployment rate, whether it's inflation.
Some of the company's workers in the region call for...
Let me stop that. It's all about the totality of the data is what's going to determine the direction that the Fed moves in. And so it was a lot of him and Han again, as expected from Jerome Powell here, confirming once again that the economy's not hot. If it was strong, if this was a strong labor market, if they had won the fight against inflation, they wouldn't need to be, coming back down by 50 basis points here once again. But they are. So this, I think, is a confirmation to the markets that things aren't so hot, which is why we're seeing the response by the markets coming down as we speak. Now, XRP is actually holding 62 cents. I'm here on the 4-hour chart here, by the way, on these charts. 4-hour chart on XRP. We got a green candle holding 62 cents. That'll be interesting. We just got the weekly close last night. We get the monthly close today and the 3-month candle close today. So we get a lot of good data from the technical analysis standpoint here after the markets close up today. For Bitcoin, Bitcoin is back up to 63,300. Actually, it's bouncing down. We're getting some volatility coming in right now. But basically, it came down and back tested 63,100. Now we're back up to 63,300 as I'm recording this update. So the markets across the board coming back down. When we look at the stock market, it has bounced. So we're actually getting a bounce now. As he was speaking, the markets were all coming back down here. You can see these wicks all coming back down, and now we're moving back up. So the S&P 500 had come down to 5,700. Now we're up to 5,728. So after coming down, we've bounced, moving back up for gold, moving back up for silver, back above $31. It briefly went below 31. Gold, silver, bouncing. So I have to continue to watch that. I want to check U.S. dollar versus Japan. Okay. So the U.S. dollar gaining against the Japanese yen here today, back up to 143 right now. Back to crypto. Let's take a look. 63,300 for Bitcoin, XRP 619, right at that 62 cent level. Now, what we want to see is for XRP is we get a close above this 62 cent level on the monthly time frame. This would set up XRP to still be within that bullish posture. We're right there, right? We need to get this close here. This is the monthly chart now for XRP. You can see the 62 cent close would have us right at that trend line. Critical level here for XRP. And this is where XRP panic starts to set in. Now, I want to take your guys' comments, questions. I'm going to pull up my bookmarks right here on X because I did share. Now, the Fed's Bostic, I think is his name. Yeah, Fed's Bostic says that he is open to another 50 basis point interest rate cut in November. So he says that the next Fed meeting, by the way, does come in November. So that's going to be the next decision. Is the day after the election is the next time the Fed makes a decision. Bostic says he's open to another 50 basis points. Now, this would match with Jerome Powell's statement for another 50 basis point, but this would be done in one move. So instead of 2 rate cuts, this one would bring us down another 50 basis point in one move. That'll be interesting to watch. Now, what else do we have? Yep. So Fed Powell says the level of job creation may not be quite at the point to keep unemployment rate from rising. The level of hires that are hiring that is going on right now is at a 10-year low in our economy. So 10-year low on employment. Look at this one right here. CVS will eliminate 2,900 corporate roles in major round of layoffs. So this is not your check cashier, which they're getting laid off and replaced by robots and AI. But now the corporate roles, we got 2,900 layoffs at CVS being reported this morning. This morning, we also saw outages across Verizon, AT&T, T-Mobile. The big one was Verizon, U.S. Cellular, and Spectrum also being reported. Now, quick note, we're continuing to pray for what's taking place now in North Carolina, Tennessee, Florida. On top of everything that's going on in the markets and the port strike that's now been confirmed, they did vote. The port strike is going to be starting tomorrow. So that's all happening at the worst time as we just got hit by that major hurricane. We got another 2 systems offshore right now set to make landfall later this week. So 2 more storms, port strike now confirmed starting tomorrow. And right now we have estimates of thousands of people missing and potentially dead as rescue workers and first responders are still struggling to get to folks in and around Asheville, North Carolina, who still don't have power. The Walmarts there were flooded out. This is why we've been talking about prepping in my community. We've been having prepping calls going back 3-4 years now in my group because of this. And one of my community members, may she rest in peace, Nicole, untimely passing earlier this year, unfortunately. But she was someone that we were so blessed to have in our community because she was down in Louisiana and she'd rode out these hurricanes multiple times. So this is kind of just standard operating procedure for them riding out these storms. And that's why it was so valuable to have those sessions with her And we've continued to keep those prepping calls going on in my Discord group because we know, hey, we can talk about crypto gains, we can talk about XRP, we can talk about flip of the switches. None of that's going to matter if you can't feed the family. And what's interesting now is how quickly society deteriorates and breaks down during these moments. And we're seeing a perfect example of that in North Carolina, Tennessee, parts of Florida right now, where it's being reported that we're seeing crazy reports of truckers that are trying to come in and bring supplies are having their tires slashed. We're seeing reports of bridges that are, still standing, but they're not allowing anybody to use these bridges to get access for folks to get supplies and to get saved. Nobody's allowed to use the bridge because there's a bunch of, worries that more bridges and infrastructure is going to be failing. Now, there's plenty of roads that are just completely washed away, plenty of bridges that are completely washed away, a bunch of towns that are completely wiped out that will probably never recover. Interesting conspiracy theory. I don't know if it's real or not, but someone was looking into, there's a huge lithium deposit in that part of near Nashville, North Carolina. And so I don't know if that's, the theory. There's some theories about that. I'm not even going to speak on that further than this. But, all this to say, the storm has arrived. Whether the storm is hitting a direct impact in your town or whether you're up here in the Pacific Northwest where I live, and I'm like, man, I just feel so blessed as I'm praying for these people that are getting hit by the worst storms. We're having the most beautiful fall days out here, right? We're drinking pumpkin spice latte in 65-degree sunny weather up here in the Pacific Northwest right now. It's just beautiful. But I know that the storm is hitting in these broader markets right now. As the markets are reacting right now, we're getting a bounce off of an initial bad reaction to Powell's statements, right? Initially, the statement, as it was being given, brought our markets down. Now we're seeing a bounce. And so I warned about how we could see these markets continue to rally for the time being until we get some sort of black swan scenario event that still is there. The potentials are still there. And I talked about this with the Discord group on Saturday about why and how I am still hedged. I'm hedged against the SEC appealing the SEC versus Ripple lawsuit, and I'm hedged against black swans because you just don't know what's going to happen. Is the hurricane coming through town? Is World War III going to continue to escalate? It was being reported this morning that Israel has begun more raids, more air raids into Lebanon as they prepare for a ground invasion of Lebanon. So, where do you put the indicator for World War III on your chart? You can't, right? And so this is why I've talked about this for the past few weeks, but this last Discord weekly call that I had on Saturday, the topic of it was about being hedged against the SEC versus Ripple appeal and also against all the black swan scenarios. Now, I covered it this weekend about how it looked like Ripple was getting ready to flip the switch. I dropped an update just 1 hour ago saying that Ripple did not flip the switch yet, and I want to dive into that right now. So I do have this right here. I wanted to show you guys this. This is the Brad stablecoin right here. This is the RLUSD. I got the early access to it, and obviously I'm joking. Those were given out in XRP Las Vegas. I forget who had the Brad coin, but they had the money gun, and they were making it rain with the Brad coin. But the RLUSD is not live yet. That's why I put out the update 1 hour ago saying that Ripple did not flip the switch yet. Ripple did not flip the switch yet on RLUSD. Right now, they're still in private beta testing. So that's where we're at right now with the Ripple stablecoin, set to go live now at any point. But for the time being, I know a lot of folks were getting excited, myself included. I was speculating, oh boy, what's going on? But the beautiful thing about blockchain is that we're able to watch all these on-chain flows. So that's why we're able to watch all this, is because it's happening on-chain. So Ripple's been minting the RLUSD on XRPL, and they've also been doing it on Ethereum. So they're going to be issuing it on both ledgers. And really, the more the merrier, right? It's beautiful to see. It's just like with USDC, right? USDC's been minted on Stellar. It's been minted on XRPL. It's been minted on everything else. That's what we want to see for RLUSD, because it's just going to bring more liquidity. The thing that you have to understand here, RLUSD is not going to replace XRP. RLUSD is the bridge from traditional finance into the crypto world, right? You have a bunch of institutions that want to get access to crypto. They want to come into the cryptocurrency space, but they haven't done so yet. RLUSD is going to be a bridge for them to get access to the crypto space from an issuer in Ripple that they can trust and a partner in Ripple that they can trust and they can work with. And Ripple now has custody solutions. They have cross-border payment flows. They can provide you liquidity. You can use it for treasury management. As we get more amendments and utilities added to the XRP ledger, you'll be able to do even more with your XRP. But first, you need the bridge into crypto. Once you get into crypto, XRP will act as the bridge between all of these other assets. But first, you got to get folks in. So RLUSD is the bridge from traditional finance into crypto. And once you're into crypto, XRP is the bridge between all of those assets that are going to end up getting tokenized on the XRP ledger. And Ripple's setting the standard here for stablecoins on the XRP ledger, but also just tokenizing other real-world assets. So think property, bonds, equities, insurance, all of it gets tokenized, put on chain. Ripple's setting the standard for how to do so, not only in how they're issuing the RLUSD stablecoin, but in the way that they're holding the collateral. This is what's so fascinating and why I think that they have a competitive advantage, is that the collateral, the Ripple stablecoin, is being issued by Standard Custody, which is the trust company based out of New York with the license approval by the New York Department of Financial Services, NYDFS, where Ripple gets to hold the collateral for their stablecoin, not at a crypto bank like Silvergate, where Circle was holding their collateral and they got exposed to $3 billion loss. That's when USDC depegged. Yeah, USDC depegged during the banking crisis last year because Circle was holding $3 billion of their collateral. I don't know if it was cash or treasury bills. I think it was just cash that they had at Silvergate. And when that blew up and imploded, Circle had exposure. And if you had USDC, you had exposure to that, right? This is counterparty risk. The biggest issue that we're trying to get away from right now, as investors, as business owners, as folks that are just trying to make it and provide for our family, we're trying to make enough to feed our families. And as Jerome Powell was talking about in his statements today, they are still trying to act like they've won the fight against inflation, which is a complete joke. The aggregate compounded inflation is still wrecking the budgets of most households these days, which is why excess savings have been completely wiped out from 2.1 trillion in excess savings to zero. The reason why that has happened is because inflation's still running rampant and it's compounded, right? And so we need to get away from counterparty risk. It's the number one thing that we've been talking about is we've been stacking utility with no counterparty risk in the form of precious metals, in the form of XRP and digital form. As I talked about on Saturday with my Discord weekly call, how am I hedged against XRP and how am I hedged against an SEC versus Ripple SEC appeal? How am I hedged? Very simple. I'm not shorting XRP. I don't like shorting XRP. It makes me feel bad. I don't like doing it. I like shorting Bitcoin. That gets me excited. That really gets me going. I like shorting Bitcoin. I don't short XRP, but I'm hedged with cash on the sidelines. So if we do get that correction, if the SEC does appeal and XRP tanks down to 50 cents, my cash is ready to go. So I'm hedging the SEC versus Ripple appeal with cash. I'm also hedging the black swan events with cash. And then I'm also hedging the black swan events with this. Because despite, everything that's been going on, gold's gone up to new all-time highs and continues to pump. Silver's still lagging, but I think the setup is very beautiful for silver. Now, we'll get a monthly close on silver as well today that'll be very interesting to see because silver's broken out to a price level $32 that we haven't hit since earlier this year. And it's been a previous resistance going back now for many, many years, actually. So $32 silver is going to be an interesting price point to watch. Gold, obviously, above 2,600, already went to an all-time high of $2,700 last week. Incredible strength, fulfilling its role as a hedge insurance policy. That's why we stack it. Of course, if you guys are looking to get precious metals, you guys know that I have my links down below, also at zachrector.com. Just go to my website, find the precious metals tab, and just let us know whether or not you want to roll over a 401k retirement account or you want to get metal shipped directly to you, we can help you out with that. But utility with no counterparty risk is how I hedge the stupidity, is how I hedge the softball questions that are given here by, what was that? The National Bureau of Economics or wherever Jerome Powell was just speaking, right? Softball questions from mainstream media, Jerome Powell, Hyman and Hahn. Our government is going to continue to run these historical deficits. Their only way out is to inflate, is to print. We've already opened up and started that next wave of that liquidity cycle, and it's actually starting in China right now. If you look, China, their stock market, their major index was up 6.5% over the night, and this is the biggest move that they've had in a very long time for their stock market. And that's a response to their central bank saying that they were going to cut interest rates, provide over $100 billion worth of liquidity, and for anybody with existing mortgages through their lenders, they were going to cut the interest rate on their mortgage by 1%. So if your mortgage rate was 5%, it's now 4%. So they've done that. They've opened up. The next wave of the global liquidity cycle is here. It's just a matter of what black swan's going to hit between now and the new administration. I'm not even I've said correction before the election. We got that in August, and we still could see a correction before the election this month. But then I also worry about between November and January when a new administration comes in, right? There's just so much that can unfold. And you see, how dirty the folks that want to stay in control, how dirty they're willing to play. They're willing to do a lot. And it's very clear to me with Jerome Powell and what's happened here. He talks about unemployment, unemployment is probably going to go higher. He said it himself. The level of job creation is not enough to stop the unemployment rate from rising. So let me translate that in simple terms. What that means, sorry, America, you're screwed. The unemployment rate is going to continue to rise. Job creation is falling off or stagnant. And if you look at websites like Indeed, which post data on hiring, where is hiring still taking place? Healthcare. Where is hiring falling off, completely falling off a cliff? Software developers, coders, engineers. That's completely fallen off. Now, I want to take some Q&A. Appreciate you guys for stopping by here. I'm sorry it was so painful listening. It is always so painful listening to Jerome Powell. Almost as painful as listening to Gary Gensler, but not quite as bad. At least with Powell, you get a little bit more answers. And I was shocked that he came out and said, hey, you're going to get another 50 bips. You're going to get another 50 bips, over 2 more rate cuts. You're going to get 2 more rate cuts, another 50 bips. It's coming for you. Which is an acknowledgement that it's actually bad out there in our economy. But the market is going to take that as, oh, yay, cheap rates, pump it up. Despite World War III, despite the turbulence here back home. And that's where I think folks are going to get caught off guard. Is if you're just blindly going long, thinking that, Fed's cutting rates, let the pump continue, let's all have a good time once again. I've used the analogy of Jerome Powell has now arrived back at the party with liquor, right? At the party, Jerome Powell, he cut us off. The kegs ran dry, the punch bowl ran out, and then he started to raise rates, which was him going around saying, hey, you guys are going to have to sober up and get a ride home. Well, what he did now with cutting rates is Jerome Powell actually just did a beer run. Jerome Powell went to the store. He's showed back up. He's got more liquor. He's filled back up the kegs. But as it always occurs, right, that's a fatal mistake because the party should be shut down. The party should be closed up because we all have gone too far and it is time to sober up, but nobody wants to do that. And the party's back on. Jerome Powell's filled back up the punch bowl. He brought some more kegs and he turned it back up. He said, DJ, turn that thing up. And where we're going to get caught off guard, though, is the black swans, which is what happens, right? With the late night party. You go too far. It's all fun and games till somebody makes a mistake. And that's going to be the black swan event. That's going to be, Israel, Lebanon. That's continuing to expand. Russia, Ukraine's still there. All it takes is one event, and we could see oil spike. We could see markets drop. Assassination attempts on Trump. Hurricane came through town, did significant damage. The storm surge and the failure of the dams and the infrastructure across the country down there is going to be devastating. The fact of the insurance market in Florida on real estate is over. It's over. It's over. The cost of insurance is going to go even higher. The insurance companies probably still will fail, and the government will have to backstop it. The number one insurance provider in Florida right now is Citizens Coverage, which is a state-backed entity. So they've already had to provide a full backstop from the state for Citizens Insurance to become the number one insurance provider in the state. And they're bragging about how many people they're kicking off their policy this year. So although we face all these issues, although I pray that we'll be able to survive what we're going to be going through here, on the other side of this thing, the response is always the same. Money printer gets turned back on. They may do some levels of debt forgiveness, but I wouldn't hang my hat on that. I'm not waiting for them to pay off any of my debts. I don't have much debt, but I don't wait around for them to pay off any of my debts. I'm not waiting for anybody to take care of me. And, I don't say that lightly. I know it's very easy for me to say, oh, I'm not waiting for anybody to save me when I sit up here in the sunny, Pacific Northwest and everything's fine and dandy up here when we got folks that are literally stranded and there's no way out. These folks are asking for folks to, save them by helicopter because there's no way out. That's a real situation, right? And these are, it's incredible. This is not just once in a decade. This is not once in a century. This has never happened before. These dams that are failing and these guys getting flooded out up in the foothills. These guys are these guys are not at sea level. These are folks that are up in the hills that are getting washed out in towns that may never recover. Incredible. But I do want to do some Q&A, so please drop the comments, questions down below. We can talk anything. Port strike starts tomorrow. Seattle's already shut down. That's another thing that they've mentioned is that with this union and the strikes that are going to be taking place on the East Coast down to Texas, is the potential for other unions and other port workers across the country to go on strike in support of them as well, which it looks like that's what just happened in Seattle. You have Verizon down. We have cell phones still offline. Trump was in Georgia today talking about getting Starlink to Georgia. So Trump's where's Biden at, by the way? Does anybody know where Biden's at? Nobody knows where Biden's at. He's at the beach. Has he woken up yet? Well, it's noon my time, 3 Eastern. So yeah, he's up and moving. He's probably actually getting ready to wrap up his day, right? He shuts it down by about 4 or 5 o'clock, head off, dinner, and well, he might be getting his afternoon nap right now. Maybe it's afternoon nap time for him. Bitcoin back up to 63,500. So we are recovering after the lows that we went down to. ETH back up to 2,600. XRP at 62.3. See if there's anything else. The summary from Jerome Powell, though, guys, 2 more rate cuts, another 0.5%, 50 basis points total. Wow. Here it is. Here it is, folks. Israel begins land incursion into Lebanon. So it begins. Israel forces have initiated their land incursion into Lebanon, marking a significant escalation in the conflict. Here you go. There you have it. Now, it looks like this is, well, you know how it goes. They're saying that this is going to be a limited invasion, a limited operation, where they're trying to go in maybe 15, 16 miles, I think is what they're saying, so that they can secure routes for Israelis to get out. They want to be able to secure safe paths for folks to get out, and they want to basically decommission any military equipment, any capabilities that have been left there for Hezbollah in that region. So they're pushing back the lines, right? And the main question that I have in this war is, where do we stop, right? Where's the line in the sand? We keep on moving borders. We keep on expanding territory. When does it end, right? What's the objective, right? Same thing in Russia, Ukraine, right? Russia's already captured many, pieces of land I think that they've wanted to capture. They have them. They're secure. Doesn't look like Ukraine's going to be able to get those back anytime soon. They've been able to get back, a small portion of land here, a small portion of land there. They've been able to make some offenses, but they've mostly been stomped out. So is that the new line in the sand and that's where this ends? Or is there going to be continuation? Same thing in Israel, right? We're extending now into Lebanon. Okay, is that going to be a temporary zone? Right, the terms that they're throwing around are buffer zones. They want to provide safe passage. They want to be able to decommission any weapons and operations that have been going on there. They've already taken out a lot of the leadership. I think it was a cousin, the Hezbollah leader that got killed over the weekend. He had a cousin replace him, and within a few hours, Israel had already taken him out as well. The other thing that's been interesting to me this whole time is that, Lebanon, Yemen, these different groups, the Houthis, the Hezbollah, Hamas, they've all been talking tough. Iran's supreme leader, they've all been talking tough. But they really have not done much in response. We got a very limited response from Hezbollah over the weekend, and it led to their leader getting taken out, his replacement getting taken out, additional leaders and top officials getting taken out, now a ground incursion. And they really haven't had much of a response. So, what is the ultimate objective here? That's, I think, my frustration is I wish that was clear. I wish that Israel was clear. Hey, this is the new line in the sand. Yeah, I wish that we could get that. But this has kind of been left, open-ended. One final point that I want to make on Ripple Stablecoin 2 before I get into your comments and questions is that you have to look at the relationship that Tether has had for Bitcoin. That's what RLUSD is going to do for XRP, right? It's going to bring more liquidity into the ecosystem, which is what Tether did for Bitcoin, right? Tether's the most traded pair in the entire cryptocurrency space. It's the number one pair for Bitcoin. And so bringing in that liquidity brought in more access and opportunity for Bitcoin. And if you look at the Tether chart next to the Bitcoin chart, it matches up basically identical. And so I think that RLUSD is going to do the same thing for XRP. It's going to bring more liquidity into crypto, going to bring more liquidity into the XRP Ledger ecosystem, and it's going to help push XRP up. It will not replace XRP. It doesn't replace the role of XRP as a neutral bridge currency. It will not replace XRP, but it will be complementary to XRP, similar to how Tether has been complementary to Bitcoin. Matt Riley says, come to the Quantum Summit in Cape Canaveral this March. Yeah, big event there in Cape Canaveral that Mel's putting on there. Unfortunately, I think I got a message back, Mel. I got to check the dates. I got a wedding that I'm supposed to be going to in March. So I already have a prior commitment, and so I might be conflicted. I was talking with Mel. Mel wanted me to come down there and speak at the event, and I was really looking forward to that opportunity, but I may have a prior commitment. I'll let you guys know on that. Save yourself. Don't count on Trump or Harris. And that's a good point. no matter what happens, whether Trump's elected, Harris is elected, neither one of them is going to be able to fix all these issues right at once. How do you solve World War III? How do you solve what's taking place back home? How do you solve inflation? How do you solve a weak economy when all that stuff's already in motion? All that war is already live. Now, do I think that one candidate might help us out better than another one? I do. But neither one of them is going to save my bag. Neither one of them is going to run my business. It's up to us right now to secure our futures, secure our investments. What was Jungle Inc. on about? Crypto Canuck, that's a good question. I think a lot of these guys have flipped on Ripple and XRP just out of frustration, right? Just out of frustration in their own lives. You look underneath the hood on a lot of these guys. I share the stories all the time. A guy will have his girlfriend will leave him, but he'll get mad at XRP. Something bad will happen. Something bad stuff happens to good people every single day. And what happens is when you get into these investments, and for new investors and retail investors and folks that aren't, haven't been in the game for a while, their girlfriend will leave them and they'll blame XRP. So I'm not saying that crypto, Jungle Inc. lost his girlfriend. I don't know if he has a girlfriend or if he can get a girlfriend. Maybe he can. I shouldn't speak out of turn. I don't know what's going on in his life, but what I see across the board with a lot of these guys is bad things are happening in their lives. Business isn't so hot. For crypto influencers that relied on receiving checks and sponsorship deals and, we're shilling projects and stuff. And I'm not talking about Jungle Inc. specifically here. I'm talking about broader influencers. Influencers are struggling, right? They're not getting as many views. They're not getting as much revenue. They're not getting the checks that they were getting to push projects. And they're taking their frustration out on other things. In this case, XRP. I corrected Jungle Inc. over the weekend. He put out a post that basically was suggesting that Ripple was supporting Kamala. And I had to correct him and say, okay, Chris Larson has voiced his support for Kamala, but Ripple has not come out and said that they support Kamala. Ripple has stayed neutral. So I retweeted him on that and I corrected Jungle Inc. It's like, dude, you can't be going out here saying that Ripple is endorsing Kamala, which is basically what he said. He didn't just flat out say that, but that's kind of what his post implied. And so I had to correct him on that. Chief Legal Officer of Ripple, Stuart Aderati, actually donated hundreds of thousands of XRP to the Trump campaign, actually putting his money where his mouth is. Chris Larson just gave vocal support. There's a big difference. Ripple stayed completely neutral. And then I watched his video last night and just observe and watch these guys. Even in their frustration and, them talking badly about XRP and saying that they're going to sell out of their XRP completely, they're still using XRP to get attention. That's the funny part. See, all these guys that grew up all their followings through Ripple and XRP coverage, and then now they're flipping, they still are going to talk about XRP because it's how they get eyeballs. It's how they get attention. So even though they've flipped their position and their stance, you better believe they're still going to be dropping XRP content. It's just that they've flipped and they've gone negative. Jungle Inc. raises some valid concerns about the XRP ledger. Well, the problem is there is some valid concerns that we can have, and there's some valid questions that we can have, but you have people that literally came out over the weekend basically saying that Ripple was basically doing shady activity because they weren't providing attestations of their stablecoin yet. Now think about this for a second. Folks who portray themselves as professionals, portray themselves as knowledgeable on this space, some of them portray themselves as experts in this space, as know-it-alls, as gurus. And these are the guys that are coming out this weekend saying that, why hasn't Ripple provided attestations of their stablecoin? Well, because it hasn't gone live yet. They're in private beta. And they don't need to provide an attestation because it hasn't gone live yet. Why do you think that they would provide attestation when they're still in a private beta? And you're supposed to be the guru on payments. It's ridiculous. But what that is it's an undertone of frustration on XRP price performance in the decision that they've made to invest in XRP and the lack of performance that it's given them. And now they want to turn and they want to find criticisms and critiques of Ripple and XRP that aren't valid. There is valid concerns. There are valid questions. And I'm willing to poke holes in the XRP thesis all the time. That's why we have such strong conviction in our XRP thesis, is because the fundamentals are still there. They're all still intact. Nothing has been invalidated. The timeline has been extended. If the SEC appeals the Ripple, case, XRP is going to come back down. That's why I'm hedged. But to say that XRP is a failure because the SEC is going to appeal and XRP comes down, and then these same guys are going to say that XRP is dead and that it's never going to do anything, that's simply not true. Now, one of the points that Jungle Inc. made was that XRP is not an asset to hold through the cycles. Basically saying that he's going to dump all of his XRP this bull run. Okay, sure. I would argue that you should hold none of these cryptos through the cycles. If you can trade them right, you shouldn't hold them through bear markets. That's just stating the obvious. And that's what I'm saying is these guys are working up all this stuff towards XRP. When you take a step back, take a deep breath, and you look at it, it's like, well, you're stating the obvious. Should you hold Bitcoin when it corrects 70%? No. Should you hold XRP when it corrects 80% during a bear market? No. So thanks for stating the obvious. What's your point? The point is that you're frustrated with your investment. The point is that you don't got your business cooking. The point is that you don't have other investments, that you overinvested in XRP. The point is that your girlfriend left you and you're mad. And I use that as a stupid example, but it's true. I'm sorry for everybody out there that's lost their girlfriend. And I make this joke, and folks have told me that, yes, my girlfriend left me and I bought more XRP. And I say, God bless you. Funny how that works. Funny how that works. Shout out to everybody that's lost their significant other because you held XRP strong. I use that as a stupid example, but it gets the point across that folks have something else bad happening in their life, their business is struggling, whatever it may be, and they want to bring that back and think that that relates. No, your bad attitude is not a reflection of XRP fundamentals. Put on your big boy pants and become a real investor in this space and understand there's a difference between fundamentals and your lack of patience in an asset that will not move in an environment where it can't move. We're in a lawsuit. Nobody will touch XRP institutions, right? We don't even have a legitimate stablecoin on the XRP ledger. We still don't have programmability. You can't do anything with this XRP ledger other than send a fast, cheap, and efficient payment. So of course XRP hasn't gone crazy yet. Is it going to stop XRP from going to $5 or $10 this bull run? No, it will. And that's why all those guys are saying that they're going to sell off their entire bag at $5 and $10, which is exactly why I updated my XRP exit strategy, is because I know that all these crybabies are going to be selling off their entire bags at $5, and they're going to get everybody else to sell off. It's going to be, something that resonates across the entire community. You have all this pent up frustration, all this pent up selling demand, that as soon as we see $2 XRP, I know people that have been in XRP now for a while, huge bag holders, they're going to be completely done at $2. Folks that'll be completely done at $5, completely done at $10. These are people that own hundreds of thousands and millions of XRP. They're done. Now, similar to them, like myself, I overinvested in XRP. Why can't they admit that? Now, I overinvested in XRP, but I'm willing to acknowledge that, and I will adjust my portfolio accordingly this bull run. That's why I'm selling off more of my XRP portfolio, is because my XRP portfolio has grown. My thesis on XRP hasn't changed. The fundamentals on XRP hasn't changed. No. I still believe in XRP long term. It's just that I know that these guys are going to run around. They're already trying to run around and tell everybody that we all need to dump our XRP completely at $5 and $10. And that works out great until you're not able to get your XRP back. And I don't have as much of a concern about getting my XRP back now that XRP is relisted on all these exchanges. I used to have a more of a concern over that because XRP wasn't listed on all these exchanges. Now that XRP is back on Coinbase, on Uphold, I just got set up on Caleb and Brown, and I have the links for those exchanges down below too if you want to get set up. And what I've been telling, what I've been telling my community, and I laid this out in my XRP exit strategy, is that I'm setting myself up with XRP on all of these exchanges. I'm going to hope and pray that when XRP does go to $5 and $10, and I start to sell off and hit that sell button, I'm going to be hoping and praying that it goes through. But I'm setting myself up on multiple exchanges so that I have good opportunity. I have multiple options for cashing out this bull run. One of my biggest concerns and fears, and something that I do expect, I absolutely expect this to happen, is that we're not going to be able to get all of our orders to go through. Show me one time in XRP's past when XRP went up to even $1 and the exchanges didn't go down and didn't struggle to find liquidity. And so, these exchanges, I'm not friends with these exchanges. They are business partners, I call them. We're going to conduct a business transaction. I'm going to hope it goes through. And if it doesn't, well, they'll be hearing from me and tens of thousands of other XRP holders that are going to be very pissed off when this happens. And it's going to happen. It's going to happen. 100%. XRP is going to go up. Not everybody's going to be able to sell. XRP is going to come back down. Everybody's going to be mad, crying. 1,000% going to happen. Prepare now. What you describe as a fraud, I mean, let me take a deep breath. I've been saying this, though. These guys are a joke. I don't want to do personal attacks. I don't want to get into these guys, but these guys are not for real. And they want to turn around and they want to, criticize Ripple. They don't have a clue what Ripple's been up to. And I've always said that's the big wild card with this XRP investment, where we may be proven wrong. I may come back a year from now, 5 years from now, and I may have to say, hey, guys, I was misled. We were misled by Ripple. What we thought they were doing didn't happen. Maybe they tried. Maybe Ripple didn't even mislead. They just weren't able to achieve what they set out to do. And maybe we'll have to do that. I'm willing to do that. I'm willing to admit when I'm wrong. But what are we looking at in front of us as far as the market reports, as far as the on-chain activity, as far as just look at the last week? Last week, and I shared this in my update earlier this morning, Chad Steingraber shared this. We got in 1 week, last week, $800,000 of net inflows of XRP. Guess how much that led to the market cap going up? $4.7 billion. So for any of the market cap bros that want to tell me that market cap is going to be an inhibitor to XRP price going up, you can shove that. Well, I got to be careful here what I say. But you can take your market cap indicator and you can play with it all day long. It's one metric, and I call it a vanity metric because, front facing, it gives you a data point. What's the data point worth? When we look at $800,000 of net inflows of XRP led to $4.7 billion of market cap growth, what are we talking about when you're saying that market cap's going to be an inhibitor? No, market cap's just a reflection of where an asset is at. It's the last traded price times the supply gives you the market cap. That's all it is. Nothing more, nothing less. Think about what happens when you get millions and billions of XRP coming in. Millions and billions of dollars worth of inflows into XRP. What's that going to do for XRP price? XRP price is going to be growing dramatically. XRP market cap is going to be growing by not just 4.7 billion. It's going to be growing by 10 billion, by 100 billion, because all it is a calculation. of the last traded price times supply gives you the market cap. Nothing more, nothing less. It's not an inhibitor. XRP isn't stopped from going to $500 because market cap can't be whatever that market cap is. 5 trillion, 10 trillion, whatever it is. It's not even a real data point, right? If you got billions of dollars of net inflows of XRP, it's going to move market cap by hundreds of billions, maybe even trillion. And so folks are running around here with their market cap calculations trying to say that XRP can't go to $10 this cycle because that would be a $170 billion market cap of XRP. I had that comment the other day. That is, it means nothing. And by the way, you want to tell me that XRP would be at $5 or $10 with a market cap of a few $100 billion. You're telling me that's all we have to do? That's nothing, right? Because all that means is a few $1 billion worth of inflows to get to that level. It takes so little to actually move these markets. Now, on that point, I overinvested in XRP, and then I kept buying more XRP. So either that'll be smart or it'll be stupid. But I'm not blaming any other influencer. I'm not blaming anybody else on that decision. But what I have done, CryptoBat, thank you for the gifts. What I have done is I've adjusted my XRP strategy. Back in 2021, when I created my XRP exit strategy, I had way less XRP, and I was going to sell way less. I was only going to sell about 10%. That was my plan, was 10, maybe 20% of my XRP. Now, if we go up to $25 XRP this bull run, which is, I don't think that we will, I have lower expectations for XRP this bull run. I'm talking this bull run, 2024 into 2025. If XRP does stretch up to my high targets of $25 and I'm able to execute my exit strategy, I will have sold off 60% of my XRP. That's way more than I originally thought that I would. But the timeline has changed, my life has changed, and I put my big boy pants on in the morning and I take a look at my portfolio and I say, well, okay, yes, I did overinvest in XRP. I continue to overinvest in XRP because I love this investment opportunity so much. And what it's allowed me to do is I get to sell off 60% of my bag, and I still have just as much XRP as I was originally had a few years ago. Right? When you've been able to accumulate that much more of a position by dollar cost averaging, when XRP went down to 45 and 40 cents this year, just like we anticipated, we kept our cool. We continued to accumulate. When XRP was when silver was under $30, I've been buying as much as I could. Nowhere near as much XRP as I own, but I've been buying as much as I could. When these things break out, we now are in a position where we can reinvest, outside of crypto. I plan on taking profits on XRP, but then actually trying to buy back a significant amount of XRP after it goes up to $10 and then comes back down to $2. I'll be buying. After it goes up to $5 and comes back down to $1.50, I will be buying. And I plan on trading that so I can pull cash out, and then I'm going to be reallocating it into other assets. Because I know what mistake I made. I made a mistake of overinvesting. But I just see a lot of these guys don't want to hold themselves accountable. And they want to blame XRP. Are you in XDC? I am in XDC. Japan use alone makes XRP $100 a coin. Japan growth and activity is about to explode. Yeah. I went over in my Discord weekly call on Saturday. I went over some of these charts. These charts are looking pretty dang good, actually. the assets that I'm looking at right now are Flare, Bitcoin Cash, Stay Token, SEI, SUI also has gotten my attention. I don't like buying into big, massive green candle, FOMOing into candles like that, but it has passed, I think, $1 billion total value lockup. So that chain has some activity and some growth. The thing is that I said to my Discord group this week is that although I'm looking at buying these assets and they look like they're forming bottoming formations, I know that this market's so fragile, these altcoins that I'm looking at are so fragile that buying in them at this level, it does expose me to 50% downside exposure, meaning these assets could get cut in half if we do get the black swan event that I'm worried about. Flares at 1.5 cents, XLM's at 10 cents, XDC at 3 cents. And actually, I can show you on the charts here. These have not broken out like XRP's broken out, right? XRP broke out. So let's start with XRP. Let me go to the daily chart so I can give you guys a little bit more perspective on the breakout. Okay, so here's our XRP chart on the daily. And here's my trend line. This trend line goes back to the high of 2021. If you zoom out, you'll see that we broke out of the 7-year wedge as well. Now I showed you guys the monthly chart earlier, though. We're right at that point. We need to close above 62 cents, I think, to confirm the breakout. And really, even a little bit more, too. But you can see that we have levels here. This one at 66 cents. That's where we went and tapped out to. I'd like to see us get a clean break of that 66-cent level. Now, when we move on over to XLM, you'll see it's basically at that same level, not at a clean breakout. Not at a clean breakout yet. For Flare, you'll see not at a clean breakout. Right? We need to get back above basically the 3-cent range to be in a clear breakout structure for Flare. 2.5 to 3 cents. For XDC, it's 3 cents. Got to break above 3 cents on XDC before it's a clean breakout. This is not a clean breakout. It's a nice little run up. Bottoming formation is there. Like I said, if we get Black Swan, this gets cut in half, or at least back down below 2 cents easily. Right? Which, what's that exposure right now? All right, I mean, 27%. Yeah. So you got 25 to 50% downside exposure on these altcoins. But the opportunity lies in the fact that they haven't had a clean breakout yet. Algorand right here at 13 cents. Algorand does find itself in the middle of these lawsuits with the exchanges where Algorand and Solana were listed as securities by the SEC in their case, which, once again, that's just the lawsuit. But we saw what that did for XRP. Say token did get a breakout. 50 cents here is going to be another resistance level. So we went up to 50 cents. I'd like to see a clean break above 50 back into 60 to confirm that. This is a token that I already traded out of. Purchased at 70 cents, sold at 95 cents, took 30% profit and got out of that thing before it dropped back down here to 20 cents. But I'm looking to get back into this thing because it's building back up momentum. It just surpassed 20 million total value lockup, which is, more total value lockup than you have on the XRP ledger, but I'd like to see more. Nothing compared to that SUI token, which is this one right here. So this one already, it's a new token pushing back up towards the all-time high that it was at back in March. Basically $2.17. How much more life is left in this thing? I don't know. I'm not FOMOing into this thing right now, but I am watching this token now. The other one that I'm watching is Bitcoin Cash. I'm in the middle of the book Hijacking Bitcoin by Roger Ver. Roger Ver was a big part of forking Bitcoin to Bitcoin Cash. Very interesting book. And it really does reveal just how Bitcoin's not as decentralized as they like to, let folks believe. And the whole story about how they did this, very fascinating. But I do now own just a little bit of Bitcoin Cash. I bought just a little bit, and I'm looking at buying some more. Charts are worthless in my mind. Well, the thing about the charts, you can't put a World War III indicator on your chart. You can't put a Black Swan indicator on your chart. You can't put a Civil War. You can't put a Trump assassination attempt on your chart. And you also can't put utility on your chart. Right? When you're looking at XRP, this is a speculative environment, pre-regulations, pre-utility. That's what you're looking at. That's what this chart will give you. How is XRP going to move in a pre-regulatory environment where utility has really been flipped on? That's what you're looking at. Nothing more, nothing less. So it gives you some data for short-term trades, but it gives you nothing as far as the long-term price action that these assets will experience based off of their fundamentals, based off of a utility environment, post legislation and regulations that allow this space to thrive. Vet says in regards to RLUSD, will be hopefully on a lot of chains outside of the XRP ledger. It being on Ethereum is not bad. It's the opposite. Embrace it. Connecting markets through different blockchains via a stablecoin is the way to go so liquidity and value can flow. This is what we want to see. Put it on Solana. Put it on Polygon. Have fun with it. Put it on HBAR. And then you have to also note, too, that the EVM sidechain also is going to bring that interoperability. Right? Here's your Bitcoin chart. And as you can see, I don't throw 50 different indicators on my chart. I look at prior supports and resistance. I look at support and resistance levels. I may look at moving average. I may look at a moon phase. I may look at, like I have this date right here, September 18th was marked because that was the lunar eclipse and it was Jerome Powell's Fed decision day. That's when they cut by 50 basis points and the pump continued. And what did I say? I said, until Bitcoin breaks 65,000, I'm not going to get excited. Well, that's what we did. We went up to 66,000. But right now, we've broken back below 65,000, down to 63,400 right now. So we're going to get the monthly close today. That's going to give us a lot of good data here. Any other final comments, questions as I wrap up this session here today? I appreciate you guys for stopping by. If you guys haven't already, could you please smack that thumbs up for me? Smack it, tap it, hit something. So this is what Will says, 0.97% away currently. So what does he want to see? XRP, you have 6 hours and 20 minutes to gain 1.7%. This would give us the highest 3-month close since April of 2022. Let's take a look at it. April of 2022. Okay, yeah. This is the 3-month chart. Yeah, basically, yeah, we want to close here. Above 63 cents. He wants to see a monthly close above 63 cents. XRP right now at 62.2. Final comments, questions. Dennis coming in with the super chat. Somebody hung a shot of a screenshot of RLUSD being priced. Yeah, the problem with that, Dennis, is that anybody can set an order on the order books, and then it's just going to be reflected on the order books. It doesn't mean anything, and I don't know if it was set for the correct RLUSD, but even if it was, it's just an order that somebody placed. It doesn't mean anything. But it's a good point, though. So the good news is that all of this speculation about RLUSD, is it going live? Is it not going live? Where can I get it? watch out for the scammers. It has not gone live yet. It's still in private beta. A lot of folks, a lot of scammers are coming out and saying that they have RLUSD live. No, they don't. But the good news is that this is forcing people to go to XRP Scan, go to BitHomp, go to other explorers for the ledger, and they're finding trust lines, they're finding wallets, and they're starting to do the research to conduct, okay, is this for real? Is this fake? And so it's getting more people to research how to use the DEX and the order books and understand trust lines. That's good. I would put out more content on how to use the XRP ledger, how to observe the XRP ledger. The problem with it is that it doesn't do good, and so I've already done a tutorial on the AMM. I'm going to be providing an update on the AMM, and by the way, that's going to be coming probably tomorrow. I don't think I'm going to get it out today, but probably tomorrow. I know you guys have been waiting for a couple weeks for that. My apologies. Had a couple things pop up this weekend that threw me off from being able to get it done this weekend. So the AMM update is on the way. And the other one that I was going to get done this weekend is the Zahao update. It was an offer, yeah. Yep. Yeah. Front page of Bloomberg right here. Powell says Fed not in a hurry will lower rates over time. But he did tell the market, he did tell us, you're going to get 2 more rate cuts this year for a total of another 50 basis points. Bostic said, let's do 50 basis points in November. He'd be open to it. Jerome Powell says we're going to do 2 more rate cuts for a total of 50 basis points. So either way, the market expectation is now going to be 50 basis points, which what you have to understand too, is the market's going to price that in now. What I need to go look at is the bond market. I wonder what the bond market's doing this morning in response to that. So, looks like, well, we're getting a sell-off in the government bonds. Remember, when the bonds are going up, the yield's going up, that's because people are selling. It's inverse, right? So, if the candle's going up, if it's a green candle for bonds, if the yield's going up, that's because folks are selling. So folks have been selling bonds this morning. We're selling. Selling long-term, and they're going short-term. So, yeah, if this continues, we could actually see the yield actually, it's crazy. The mortgage rates are going back up. So, right, everybody thought, Fed's lowering rates. This means that my mortgage rate's going to go down. Wrong. Fed lowering rates, causing folks to sell off, means bond yields are going up, and the 10-year is what's correlated to your 30-year mortgage, and that's only gone up since the Fed cut. See, the Fed cut, the yield was at 3.6%, and ever since they cut, the yield's gone up to 3.8. Your mortgage rates are going to be going up. And now the bond market has to price in another 50 basis point rate cut this year. Long duration, selling off. Short duration, 3-month. Folks are buying it. That's a sign that the economy's weak, by the way. That's a sign that folks are worried. Now, intraday trading, let's take a look at it. I said you had the market coming back down here. And that was during Jerome Powell's speak. Dow went below 42,000 briefly. Now it's back up to 42,300. I would not be surprised here if we see the market close green. The market's going to be closing here shortly, actually. In, what do we got, 12 more minutes before the market closes? The stock market, that is. So can we get a final push here? This is the market close. Why don't I stay live here while we do the market close? So I'm going to stay with you guys for the market close, but I do need to use the restroom real quick. Here's your Bitcoin chart. I'll put you on the Bitcoin chart while we watch this thing. Here's your Bitcoin chart on the 15-minute. I'm going to go do a quick potty break. I'll be right back. Stay tuned. I'll be back for more. All right, we are back. Oh my gosh, look at you. Look at that big head, that big noggin. Yeah, I know you want to play with that. Here, you can play with this one. All right, folks, we're watching this market close here closely. I got my partner in crime here. I got the big boy. The big boy's here. he he's always in amazement when he comes into Daddy's office. He doesn't get allowed in here that often. So when he does get to come in here, he's like mind blown. Okay, Bitcoin just shot up. Bitcoin just shot up to 63.6. Market is moving back up as we close it off here. Yeah. So we're about to close here in 8 minutes. We got 8 minutes to close. Let's see here. Gold pushing back up too. Definitely has his mom's looks. Yeah. Yeah, we get that a lot. Now that he's growing up a little bit, he's starting to get some of Daddy's features a little bit. He's got Mama's eyes. Mama's brown eyes, huh? Yeah. Yes, you do. Can you talk into the mic? Say hello. Can you say dada? He's saying dada, saying mama. Once in a while, it sounds like he's trying to say a few other words too. But he just started walking over the past couple weeks. Yeah, yes, you did, huh? Yes, you did. Yeah. What do you think of the iTrade Roth? Is that iTrust? You mean iTrust Capital? Mario just subscribed to the channel. Mario, thank you for your support. Little man learning early. Oh, yes. Oh, yes. Both my children were listening to Dan Pena in the womb. And they've been listening to Daddy talk for, since they could hear me through. Huh. Yeah. Yeah. You guys all like hanging out in the office. Fix that so you guys can see that big, beautiful noggin. And we're starting to get some hair up there, aren't we? Yes, we are. All right, guys, this is going to be interesting. So we got 5 minutes left to go till the market closes off here. Oh, look at this. Look at these green candles. They're pumping this in for the final close. Oh, don't press buttons. Okay, there we go. Wow, they're sending this thing. They are sending this thing right now, folks. Let's go back to crypto. Bitcoin was up, cooling a little bit. XRP not doing anything. Back to our stocks. They are pumping this into the close. This is the final candle here before this will close off today. Because I'm on the 15-minute chart right now. Excuse you. Huh? Can you say hi? Mm-hmm. Are you one? Yeah. Are you one? One. One. That was pretty good. Huh? That's a calm baby. Mine would never sit that peacefully. Well, he's sitting calm because he's actually getting to hang out with Daddy in the office. Huh. Yeah. Yeah, he's a pretty good boy. Yeah. As long as you keep him fed, he's a pretty happy camper. He's a simple man, just like his dad. Does he? Somebody asked, does he say when moon? I can't say his name here. I can't say his name, but we'll just call him Little Guy. Little Guy? I'm only bringing him on because we're almost 2 hours into the live show, so most of the people that watch the streams after the fact, normally they don't make it through the full 2 hours. They'll like just watch my update and then maybe not watch the Q&A. I mean, a lot of people watch all my content all the way through, but we're sneaking the little guy in here. Yeah, sneaking you in. They are really sending this thing into the close, though, aren't they? I think it's some fat green candles. Like I said, they're gonna finish the day green here. It looks like it's gonna be achieved. Back to the charts. Yep, don't press those ones. You got, yeah, still pumping her. No. Don't pull that one. No. Yeah, okay. You say bye to everybody. You say bye. Yeah. You go see your mama. Bye-bye. Bye-bye. All right, all right. Back to business. Only give him 1 million and make him work for the rest like Uncle Warren. That's right. That boy's going to be working. That boy will be working. Hammer long morning session. It has, man. Jerome Powell actually spoke for a while. I thought that, I mean, his speech was only what, like 10 minutes maybe? But then he did that fireside chat or whatever that was, Q&A, and that went on for another half hour or so. I was actually surprised that he went so long. HBAR still a good investment. I just haven't liked the tokenomics that I've seen on HBAR. You know, it's just governing council's good. I want to see more people using it. From a father of 3 daughters, it's always nice to see a proud father. Keeper, I appreciate that, man. I wish that I could show the family more. I just got to be careful these days. You know what I'm saying? I wish I could show them more, though. They are everything to me. You know, with a lot of these coins, though, like HBAR and others, you know, I think that there's the potential to just ride up some of these coins to previous highs. You know, I'm not expecting some of these coins to go set all-time highs that are 3 or 5 times larger than their previous all-time high. Like, that's the extent to I think many of these projects will go. If you wanted like my general thoughts, like across the board on a lot of these utility coins, they're going to do 2 to 3x their previous all-time high this bull run. And the same things that I said about XRP being so much pent-up selling demand and pressure, same thing applies to these utility coins. You have a lot of folks that have been holding Algorand, HBAR, Quant, XDC, XLM, and they can't wait to offload these coins at all-time high or a little bit higher than that. So I don't think that a lot of these coins are going to extend out 3 to 5 times their previous all-time high without utility going live, legislation passed, and things really being up and moving. I don't think that happens. I don't think that happens for any of these utility projects this bull run. I think that this bull run will be the final speculative bull run for crypto, and it's going to take these projects past previous all-time highs. Like for Bitcoin, I think that it'll double up its previous all-time high. Previous all-time high was 69,000. That takes Bitcoin to my target of 120 to 150. That's all that I see for Bitcoin this cycle. Do I think that XLM will reach $1? Yes. So when you look at XLM, its previous all-time high was about $1, I believe. Right. So I mean, my targets for XLM, I'm going to be updating my XLM exit strategy, and I'll provide that for you guys. It's only a couple bucks for XLM that I think it stretches out to this bull run. A few bucks. I would be so happy with previous highs. That's the point. BA Diego. Yeah, that's the point. Is that there's so many people that want to just secure profits and would be happy to just get back up to previous all-time high. Like for XRP. Got a lot of folks that are completely out at $2. See you later. Now, so we just got the close. Market is closed here now. Yep. So we just got the monthly close. Let's go to the 1 month. This has been incredible. What a run. What a run. Okay, so I'm on the monthly chart right now, zoomed out, and I'm going to zoom us out to 2020. We're just going to see what happened since 2020 here. So we're starting out here. This is the NASDAQ 100. And you can see on the monthly chart, this thing, typical back test here, still showing strength. The potential to set a double top here on the NASDAQ looks like that could be in play. S&P 500 is back at fresh highs already. And that's something that I talked about in August when the Japan carry trade unwind occurred. We said, watch out for them to go set new all-time highs and pump this thing back up. That's exactly what happened. And that's exactly why the S&P 500 is closing out the month here at a fresh all-time high of 5,700. That's crazy, man. They literally just sent the S&P 500 to a fresh all-time high for the monthly close. And they almost did the same thing for the Dow Jones. The Dow Jones, they sent it, but then it did just finish the month here at 42.3. But they sent it all the way up to about 42.5, 42.6. Now, the problem, though, is I showed you guys the 2007 charts for these. And I showed that back as we were leading up to the September 18th rate cut decision. Is I showed you guys that the market pumped for another 2 to 3 weeks after that first rate cut, September 18th, 2007. The market pumped for a couple weeks, and then the S&P 500 fell by 57% over the next 360 days. What's happening this time around? Same exact day, September 18th, 50 basis point rate cut. Market goes up for a couple more weeks, goes and sets a new all-time high for the S&P 500 and the Dow Jones. And then what happens next? And you have to understand, too, the difference between the equity market, the traditional stock equity market, and crypto, where it may take a year for these stocks to correct, even if it was just a regular correction, not even a black swan, nothing crazy. But say we just got a 10 to 20% pullback in these equity markets, that might take place over an extended period of time. Couple months, few months. In 2007, it took 1 year for the S&P 500 to fall 57%. The difference between that and crypto is that crypto moves so much faster. Crypto can drop 20, 30% in a day, right? So we could get cleaned out or smacked in crypto, but the good news is how quickly we will recover from that level. Now, when you look here, I kind of anticipate something similar to 2020, where we get hit, but we get a V-shaped recovery. That's what I'm expecting this time around. We'll pump until the election. Maybe we'll have a correction before the election. Maybe we'll have the election, but then something happens after that. And that's what's going to lead to this drawdown. And, from these levels, like I said, you come down 10%, 20%, it can all easily be done, right? That's nothing wild. That's nothing out of the ordinary. In fact, we did it in 2022. We had a technical recession. We had a technical bear market. Same thing for the S&P 500, down 27% in 2022. People forget that. See, people forget what happened in 2007 after the rate cuts. People can't even remember what happened in 2022. Let's look at gold. How about gold since then? How about that little run up? How about that little run up for gold? You could have bought this sucker at $1,200 back in 2017, 2018, 2019, started to move. After the 2020 correction, you could have got gold at $1,600. Actually, no, this is in 2020, it was a back test of 1,500. In 2022, it was a back test of 1,600. And then we've just been pumping ever since, basically. 128% move. You've doubled up. You took advantage of any of these opportunities, you've doubled up. Now for silver, not quite as good. The lows of 2020 took us down to $11. So if you would have bought those lows, well, you would have doubled up and nearly tripled up your money. But if you would have bought anywhere under this $20, I mean, we've had incredible opportunities here. And that's the thing, is when I go back to the stocks have ran, right? This stock market has ran. The Dow Jones has ran. The NASDAQ 100 has ran. The S&P 500 at all-time high. I don't like buying assets at all-time high. I don't know about you guys. Personally, not my thing. So that's why I'm looking at other assets that still have room to run. Just checking your guys' comments right now. Where am I holding the XRP party? Boy, we're going to be doing a nationwide tour, having ourselves a good time when this thing goes. Now, Bitcoin on the monthly, this candle is going to close, I think, at, is it 7 p.m. Eastern? I forget how we do it in crypto. If it's 7 p.m. Eastern is when the daily closes on crypto. They kind of just have to pick a reference point for crypto because the market's open 24/7, 365. So I believe that they pick a 7 Eastern time is typically, I think, when they do that. You guys can let me know in the comments down below if I have that wrong. Rhonda, how are you doing? Where's your wine glass, Zach? It's still a little early. I drank in, I think, 3 or 4 cups of coffee, so I really don't need any more coffee today. It is 1:10. Okay, guys, yeah. I am going to have to wrap up this session. I didn't realize that we'd already gone so long. Hard to pick bottoms. That's a good point, Dennis. You know, it's like I'm looking at these charts on some of these other cryptocurrencies that are attracting me right now. And I'm saying, wow, this is attractive, but I also understand the downside risk, right? And you know, that could be a downside risk of 20% to 50% depending on the crypto. You know, the smaller market cap cryptos are going to take you an even bigger of a hit. When you look at Bitcoin, do I think that Bitcoin's going to get cut in 50% from this level? I don't. But, you know, going to be watching it closely. I'll be joining the tour. It's going to be a fun time. Yeah, guys, so thank you so much for stopping by. We've been live here for 2 hours here today from Jerome Powell speaking to breaking this whole situation down. We're going to continue to watch it. I also dropped an additional update this morning. So if you are not done listening to me, you want to see some more content from me, I dropped an update a few hours ago, and that one was more focused on XRP and the Ripple stablecoin. The title of that is Ripple, what did I title it? Ripple has not flipped the switch yet. That was the title of it. So Ripple has not flipped the switch yet, but they're getting ready to do so. So make sure you guys are prepared out there. You can get in touch with me by going to zachrector.com. Come on, stop by. We'd love to have you in the community. All of our community resources are available at zachrector.com. We have exchanges, wallets, precious metals. Roll over a 401k, get the metal shipped directly to your door. Let us know how we can take care of you. If you guys want to see my XRP exit strategy, that's linked up down below too. You can get access to that. And if you want access to our recorded Discord weekly call, you can listen in on our Discord weekly call that was done on Saturday. I make that available on Patreon. So if you want to try it out, see what's happening in our Discord group, you can get access to that for $5.89. Test it out. Come see what's cooking. With that being said, it's been an absolute pleasure here today. I'll see you guys later. Stay blessed out there. Thank you. Someone asked, can we see your wife? No wife reveal today. I did bring wifey to XRP Vegas. I do try to bring wifey everywhere that I go for all of my work. So wifey is out there. I'm not hiding her. I do like showing her off. She's beautiful. She's very smart. And she is my better half for sure. But no wifey reveal in today's episode. You'll have to stay tuned and come back for more. See you guys.